Hello and a very warm welcome. You're watching an India Today special discussion. This is the Big Economists Roundtable. Over the next 1 hour, we'll be joined by some of the sharpest economic and financial minds as we look at the big challenges the Indian economy faces and we discuss what the new Narendra Modi government should be doing to try and bring the economy back on track, to reverse the consumption decline and to kickstart private investment. Joining us on this broadcast, I want to welcome first live from London, Lord Meghnad Desai, well-known economist. With us also on this broadcast, we've got Samiran Chakrabarti, he's the Managing Director and Chief India Economist of the Citigroup. We've got Mohan Guruswamy, Founder, Centre for Policy Alternatives, Naina Lal Kidwai, Chairperson of Max Financial Services, one of the best-known financial minds in this country. Also, Dr. Shamika Ravi, Member of the Economic Advisory Council to the Prime Minister. So I want to take you through the questions we'll be asking our guests over the next 1 hour. Question number one, how should the Prime Minister be dealing with the job crisis? There's a new high-powered committee that's been set up. What should the ministers and the think tank of the Modi Sarkar be doing to try and resolve the unemployment quagmire? Question number two, how should the government be dealing with mounting trade tensions with the United States and with China? The US asking India not to purchase advanced weapon systems from Russia, threatening to cut off supplies to India if we were to proceed, asking us not to go ahead with Chinese telecom equipment. If we were to accept, we're in trouble. If we don't accept, there's problems with China. How should we deal with trade tensions? Also, question number three, how can the Prime Minister reverse consumption slowdown and jumpstart the Indian economy across various parameters? Consumption in the private sector coming down. How much of an alarm is this sending off, and what should be done to try and reverse that? Question number four, will the Prime Minister this time follow through his claim that the government has no business of being in business? He said it in the past. He repeated it in an interview we did with him during the campaign. Will he push through with disinvesting loss-making public sector units like Air India? And finally, will the Prime Minister bite the bullet on contentious reform on law, on labour, also on land? The Prime Minister tried it the last time. It boomeranged on him politically. Will he dare touch those contentious issues this time? I'm joined for this broadcast by my colleague, India Today's Managing Editor of Business, Rajiv Dubey. So let's get started. I want to take question number one. How should the Prime Minister deal with the job crisis? Remember, a high-powered committee has been set up after the new government came into place. The government now accepts that this is a problem that needs to be dealt with. During the campaign, the BJP was sending out a message that there isn't a problem. Now that you have a government in place, they're accepting there is a problem. I want to ask Shamika Ravi, who works as a member of the Economic Advisory Council to the Prime Minister, how do you believe the government ought to be dealing with the unemployment situation in the country at this time? Shamika Ravi.
Well, on the jobs front, it's very clear that we have to go beyond national level policies towards what we call now precision policy, because the data is very clear. There are significant variations across states. Though the overall national unemployment rate is around 6%, you have states like Gujarat and Karnataka with unemployment rates of 0.9 and 1.4%. And then you have states like Kerala, which have unemployment rates of about 17–18%. So, we know that the variations are because of local state policies, which are systematically improving the what we call the ease of doing business. Because the unemployment rates in each state is very strongly correlated with the ease of doing business performance, the ranking of these states. So very much, we have to move beyond talking about jobs as a national, problem as being something more precise. We have to talk about specific sectors. We have to talk about specific states, and in particular, overarching improvements in the business climate within the states.
Mohan Guruswamy, would you agree with Shamika Ravi's point that this isn't a problem at a national level? This is more a problem that should be looked at the state level. States like Gujarat are doing way better than states like Kerala, and therefore policies have to be targeted according to the states and the problems of those individual states. Mohan Guruswamy.
I don't completely agree with her. problem is at the center also. The center has to take a lead in this, has to orchestrate a consensus on labor reforms, on new industrial policy, land acquisition, and lots of things. So, the center just can't pass the buck and say that, Kerala has got a problem of 17%. First of all, I'm not convinced about that Kerala figure at all, because Kerala has the highest per capita income in the country, and even if it gets money in services and remittances, it's because of its investments in education. So you can't say that it's doing badly. Matter of fact, there are states like with Punjab which have labor shortages because of the demographic turn. States like Telangana, Andhra Pradesh, Karnataka all have are reaching close to zero population growth. So there's migration from Bihar, Orissa, and all these parts. So you can't say that there are no jobs. There's no unemployment here. There is unemployment. There's a demand for labor, and there is an abundant oversupply of labor. It doesn't matter where they come from. Labor moves.
So you're hearing two completely contrarian points of view. Lord Meghnad Desai,
for that you need labor
you hear
reform.
the advisor to the Prime Minister say, deal with the problem on a state-by-state basis. Mohan Guruswamy saying, no, you have to look at it nationally. Issues like labor reforms, land reforms, till the time you bite the bullet on them, you will not be creating adequate job opportunities for India's youth. How do you believe this new government ought to be dealing with the labor crisis?
Are you asking me?
Yes, Lord Desai, I am.
Yeah, okay. I have great skepticism about the whole job situation. I think the statistics are completely unreliable. And the first thing that a powerful group of ministers should do is to find out what the reality is. Because for an economy growing at 7% for 5 years, it cannot be true in simple economic terms that there can be a job crisis. The productivity would have to be growing at more than 7% for there to be no job creation. So I think the first thing we ought to do is to find out what is happening in the economy. If you mean by job, a job in a formal sector, then there may be a shortage of jobs. But there is no shortage of, because I've never known a single case in all economic history where a 7% growth in economy can create unemployment. And the idea that the unemployment level now is worst for 45 years. When you think about what 1974 was like, it was the year before the emergency, and there was a serious inflation. There were demonstrations all over in Gujarat and Bihar, led by Jayaprakash Narayan. It's just not comparable. So I think what we first need to understand, how has the economy changed? Jobs are not just manufacturing, jobs are just not formal sector jobs. There are lots and lots of jobs in service sector. So we first need to find out what
you make an important point that till the time you know the quantum of the problem, you can't come up with a set of policies to deal with that problem. Samiran Chakrabarti, do you believe that's the first thing the government needs to do as of now? The government doesn't like the manner in which job data is collected, unemployment data is collated. Shamika wrote a piece on that as well. Till the time this issue is addressed, you arrive at what is an acceptable definition for how unemployment is generated, unemployment data is generated. You can't possibly come up with policies to deal with that. Is that the first issue you think, Samiran Chakrabarti? How would you suggest the government deal with the mounting job crisis?
Well, it's true that some of the data that has come out of this employment survey don't pass the smell test, as we say. So that's definitely something that the government can look into. But I think two broad areas where we have to look for job creation strategies. One is construction sector. If you look at between 2004 to 2011, 48% of non-agricultural employment was created just in construction. That's a sector which is down now badly because of both real estate and infrastructure, and the fact that these are becoming more capital intensive than labor intensive. And the second aspect that we have to look into is that more and more we're probably going to move out of mass manufacturing into mass services. So what kind of mass services sectors we have to promote, like travel and tourism, which will create the jobs for tomorrow? I think these two strategies on construction and mass services, if they are followed well, then we would have a consistent source of job creation going forward. We might dispute today's data, but it is not disputable at all that about 5 to 6 million people will be seeking jobs every year for the next 10 years or so. So we have to create jobs in a large number, whether or not today's unemployment rate is 6% or 4%.
Rajiv Dubey, what's your sense of how the government's new committee intends to deal with the job crisis?
So Rahul, anything we do in the economy, whether it's related to jobs or business or economic growth, GDP growth, we have to have immediate solutions. We have to have short-term solutions, medium and long-term solutions. Many of the things that are being talked about are structural, long-term and medium-term solutions. What we need right now is to put brakes on the economy, which is decelerating still. It hasn't bottomed out yet. 5.8% is not the bottom that we are seeing. So what we need now, for instance, immediately is to create demand in the economy, which is either through cut in tax rates or making borrowing easier, which is to do with banks reducing interest rates. The other thing that we can do is, for instance, immediately we can take up these 6.7 lakh crore of stalled projects in the economy. 6.7 lakh crore, out of which 3 lakh crore are in the private sector, whom you can only nudge. 3.5 lakh crore are in the public sector, which the government can decide on its own what to do with it. It can just push these projects, which can create enough demand in the economy and also ensure that there is some kind of job employment generation also coming through these projects. So there have to be immediate measures, there have to be short-term measures and long and medium.
Naina Lal Kidwai, globally the job debate is around artificial intelligence, machine learning, automation, and how that's impacting labor. Now in India, forget dealing with the real challenges of how, in manufacturing, artificial intelligence, machine learning can come in and disrupt how that manufacturing process undergoes. Here we have a very fundamental debate about whether we like the job data or not, whether we like the unemployment data or not. So tell us, what do you believe should be the roadmap for the Modi Sarkar to be dealing with the unemployment problem?
So Rahul, I certainly agree that economists and all of us have to be comfortable with the job data, but I am really on the same page as Samiran that why should we not look at additional job creation, whatever the numbers be, even while we try and tackle the data. And he took the words out of my mouth when, in terms of the two sectors which I think deserve attention. So it's real estate, and therefore construction, which is a real mess right now, needs immediate attention. We need to absolutely look at the potential India has for tourism and replicate the enormous success of Kerala and Rajasthan across the country, and do that through building of hotels, restaurants, and the entire infrastructure of roads that go with attracting tourism. And as you well know, tourism is a very labor-intensive industry, and the enormous potential therein of jobs. I would just add a third one, which I didn't hear mentioned, which is agriculture. And our ability to increase agricultural productivity will in turn drive demand. And you well know that through many a year, we have had rural demand as a great mainstay for demand generation. And my own view is that this would happen better not through increasing the minimum support prices, which is an immediate fix when there is farmer distress, and it was clearly used in important election years, but really look at improving the way we are able to export agricultural products. And we have seen how, whether it was research with Pusa Basmati on the one hand or sugarcane, we were able to enhance export. So if we can look at agricultural export, the entire supply chain which goes with supporting it, bring in therefore farmer productivity, farmer profitability, we will generate demand on the one hand, and on the other very critical trade deficit resolution through export promotion.
Okay, Shamika Ravi, do you have any specific ideas on how in real estate, for example, employment can be jump-started, because you've got so many dwellings which are not completed, builders unable to meet their obligations, consumers having paid a certain amount of money, not getting their flats, construction activity therefore completely grinding to a halt. How does the government, what can the government do to try and find a way out of this vicious circle?
So So Rahul, it is quite clear when we look at, and I agree with all the panelists, except, you know, if we were to sum up, eventually job creation is an outcome of wealth creation. I think going forward, the priority as far as you know, the central government policies ought to be concerned, have to be growth over and beyond all other policies. And it is not just limited to real estate. In fact, real estate has been one of our large job creators, but this entire missing conversation around manufacturing, and I'm glad you made an earlier reference to US and China trade war, but in all this discussion, we have to realize that, look, agriculture has a natural ceiling as far as productivity is concerned and absorption of how many potential jobs it can create even in the long term. That's just the nature of production in agriculture. Services is growing, but there again, given the demographic and the level of skill, there will be a natural limit to that. We have to think of manufacturing and, you know, the entire, therefore, this whole discussion around ease of doing business and why growth over and beyond all other policies right now has to be the central focus of Modi 2.0.
Okay, so I come then to the second question, because far from growing, we're actually seeing a decline in private consumption. So what should the Prime Minister be doing to reverse the consumption slowdown that we are dealing with at this time? What should be done to reverse the consumption slowdown? Because at this time, from car sales to two-wheeler sales, tractor sales, everything is coming down. Moped sales came down 9.8% in March and 5.9% in April. Non-oil, non-gold, non-silver imports are coming down. So consumer demand is contracting. I want to go across first this time to Naina Lal Kidwai and understand from her, why do you think this is happening? And if we need to spur consumer demand, what do you believe are the policy interventions the government ought to be doing?
So I did mention putting more money into the rural sector, but I would just add that we have an issue with liquidity and bank finance, which traditionally have been big supporters of these two sectors which you mentioned, the whole auto, two-wheeler area, and consumer durables as well. We need to bring back liquidity into the system, traditionally been there through the NBFCs. There has been a lot of corrective activity that has happened on the NBFC front, and we will see the NBFC regulatory mechanisms now that will be much more akin to banking than they've been. All in the right direction, but I fear it's too much, too fast. And what we've had as a result is money that traditionally went into demand through borrowing by individuals, money which went into the real estate sector, which happened traditionally much more from NBFCs than from banks. All of this is impacting growth, and how the liquidity part of the way banks and RBI manages this going forward is going to be critical, because we all know that there has been a squeeze on that front.
Samiran Chakravarti, why do you believe Indian consumers are putting the brake on their consumption budgets? And what do you believe the government can do to try and reverse that?
So three quick points. So one is there's a slowdown in the rural consumption, there's a slowdown in urban, and there is a slowdown in the government consumption itself because of the election model code of conduct. Out of which the easiest one is the government slowdown part of it. We have already seen significant government consumption or spending after the elections. In 1 week, the government spent more than 60,000 crores, and that's slowly going to trickle through the system and improve the consumption side of it. So we are less worried about that part. The rural consumption part is more a function of food prices. We have seen a significant kind of low food inflation for almost 2 years now, which has started to affect the rural consumption. But at the same time, the wholesale prices of food has moved up quite a lot. So if the actual retail prices start moving up, increasing the income for the farmers, I think that's the time when we will start seeing rural consumption to go up. So for me, the big decision point for the government is how to ensure that the MSP reaches the maximum number of farmers. So the PM Asha scheme announced last year, in this year's main cropping, Kharif cropping season, if PM Asha is fully implemented, I think that will be a big achievement. And quickly on the third one, which is the urban consumption part, we have to understand the importance of the NBFCs that has grown over the years, where they are now almost 1/3 of the total credit in the system. And if the NBFCs are not growing at a significant pace, then it's definitely going to affect urban consumption, because we have to understand that over the last 5 years, almost 10 percentage points of GDP of consumption has taken place out of either increased borrowing or lowering of household savings. So that leveraged consumption, if it stops, then just by job and income growth, it's impossible to sustain the same level of consumption as it was before. So these 3 points on rural, urban and government consumption, if they are taken on board, then I think we should see better
Rajiv
consumption
Dubey, explain
recovery
to our
in second
viewers
half of the year.
how a meltdown in the non-banking financial sector can cause consumption to come down, and what do you believe needs to be done to address it?
So what has happened, Rahul, over the past decade or so is that the banks have lent fewer and fewer to the consumers. Instead, consumers have been taking a lot of loans from the NBFC sector. So when NBFC sector gets into trouble, consumption ought to be in trouble. We are 67%, almost 2/3 of our economy is consumption economy in terms of GDP. So when consumption is in trouble, we are in serious trouble. That is why you are seeing that the deceleration has become so accelerated over the past 3 quarters as opposed to the past 4 years. The deceleration is down to 5.8% from, we used to be 8.5%. So the last 3 quarters is what has happened. NBFC sector got into serious trouble. It stopped lending. It's about 30 to 40% of total borrowings that the consumers take. So it's enormous. When that got into trouble, the consumption has tanked. Now, how do you get this out of it? Basically, the only thing that you can do as far as the government is concerned is to ensure that some of the GST rates are brought down to lower rates maybe, and also ensure that borrowings by banks can be enhanced by pushing the banks to reduce interest rates. We've been saying, Rahul, that since 2014, when RBI turned its policy parameters, it started reducing policy rates. Since then, 2.25% of policy repo rate has been cut. Banks have only passed on 0.6%. This is criminal. This is criminal. Banks are choking up the economy. We ought to push the banks to reduce the interest rates so that there can be more enhanced borrowings by the consumers as well as by the industry.
Mohan Guruswamy, do you believe that the deceleration in the economy is bottoming out? Do you believe automatically we will see an upward curve from here? What do you believe the government ought to be doing to try and reverse the consumption slowdown?
Well, I think, the consumption will start picking up once capital expenditure picks up. If you look at the capital expenditure GDP graph, it's been steadily dropping since 2012. It's not something which happened during Modi's tenure. It began before that. And for 7 years now, it has been dropping. And unless you get it looking up, then you won't create new consumption. You can't just keep creating consumption by printing more money and giving higher wages as you've been doing so far. Government expenditure, salaries are huge now. They're about 12% of GDP. And you just can't keep giving them more and more money so that they can go and buy more cars and refrigerators. You've got to make investment. You've got to create jobs. Look at the bare facts that, at one time, 60% of India's GDP came from agriculture and 60% of India's labor was in agriculture. Today, India's GDP is much, much bigger, and only 13% of GDP comes from agriculture, and 60% are still employed in agriculture. So you have this huge country sitting in the hinterland, with people are struggling, people have no jobs, people have no money, and food prices will not go up. Agricultural produce will not go up if you have oversupply now. We're coming to a position where producing more food than we need. Unless you create demand, food prices won't go up. And you've got to incentivize investment by private sector for people to feel buoyant about the economy, about the state, that we can invest money and make profits out of it. A little bit of inflation is okay. But you can't have consumption-led growth forever. You've got to have expenditure-led growth forever. You know, capital expenditure, you can't have revenue expenditure led growth.
Meghna Desai,
You've got to
the Modi Sarkar will
make
say they
investments
spent the
on-
last
which
5
create
years
jobs, not investment
trying
which
to
creates
get
consumption.
private sector to start investing once again in the India story. To a great extent, that didn't happen. We saw unutilized capacity levels come down, but not so much, which would spur further private investment. What do you believe the government ought to do at this time to spur consumption and to reverse this decline in consumers just going out and buying different things?
I think, first of all, again and again, I have to keep on saying that in the last 5 years, the economy did grow at 7%, and that is actually quite a high rate of growth. It's also difficult to maintain it stable at that rate, and, I welcome that. I think every time consumption goes down, you don't have to rush in to reflect the economy. I quite agree with Guruswamy that, we really have to understand that India needs investment for growth. It needs a good fiscal discipline for growth. And I think more than anything else, it needs to clean up the financial markets. I think the cost of credit is high in India because the financial markets have been very badly run. The public sector banks have been dreadful. It's very, very bad governance, so we have a lot of NPAs. And although the government is trying through the insolvency and bankruptcy code to sort it out, it has got to do much more. And the NBFC sector is another problem. So I think we need to clear up the private sector, the credit availability and the cost of credit, because right now India cannot afford such a delicate and crisis-oriented financial sector as it has been. So I think the first priority for the government should be reform of the financial sector. It should also make sure in the budget that it is not going to go after a spending spree, because I think that will be very fatal to the prospect for the economy. It would affect the inflow of foreign direct investment. And I think, more than that, I want to actually urge that growth in economies is caused not by governments, but by what people do. It is hundreds and thousands of people's private decisions to consume, to invest, and so on. So government should not rush into trying. I think, for example, the quarter before the election had a lot of uncertainty, so many people may have put off consumption plans just for that reason. So we have to factor in that there may be uncertainty in the quarter where consumption was falling, and let's see if something recovers naturally. Because we believe too much in government. We actually believe that governments cause growth. Governments don't cause growth. People cause growth. People have to have confidence in the future. They have to have a confidence that they'll be able to make profit if they're a business or get a job if they're people. And the government has just to be the guidance, like the traffic policeman, basically guide the economy properly.
This what Lord Desai is saying would be music to the government's ears, because that's really a best case scenario. That private investment wasn't happening because corporates wanted to see who would come back to power, to see whether there was a stable government in place or not. Consumers weren't spending because they weren't certain of what will happen, and the government had cut down in the last quarter to be able to meet its fiscal targets. And therefore, now that there's a stable government in place, you're saying naturally there's a possibility that all these three metrics could get a boost. We'll know over the next few months whether that happens. Here today, Economy Roundtable. Make no mistake, this is the most important conversation in the country at this time. Everything else is just noise. How should the government be kickstarting the India story? That is what everyone needs to focus on. What are the ideas? What are the policy measures? What's doable? What's not? That's what we need to focus on and talk about some of these things. We're joined on this broadcast by Samiran Chakrabarti, Chief India Economist of Citibank. We've also got Lord Meghna Desai joining us from London, Mohan Guruswamy, the founder of the Centre for Policy Alternatives from Hyderabad, Naina Lal Kidwai, Chairperson of Max Financial Services, Shamika Ravi is a member of the Economic Advisory Council to the Prime Minister, and Rajiv Dubey is my colleague at Business Today. I want to go across and ask our guests now what they think the government should be doing about rising trade tensions with the United States and also as a corollary with China. And I want to put that question first to Samiran Chakrabarti, because you've got And we've seen in the news very recently, Donald Trump say India can't buy the S-400 system from Russia. They're saying if you do, there will be sanctions. India thought they may find a way around that sanctions. Now with Turkey, we've seen that's not happening. Turkey is a strategic ally and yet having to face severe pressure from the Donald Trump government. They're also saying don't proceed with 5G technology from Huawei. You've got a new foreign affairs minister, the prime minister is back in the saddle. What do you believe, Samiran Chakrabarti, is the best way for India to deal with this blowback coming from the United States, where they're telling us what to do and threatening to impose sanctions if we don't do what they want us to?
I think, Rahul, let's just broaden the context a bit, because there is a foreign policy issue versus what is a foreign trade issue. I think let me concentrate more on the foreign trade issue and leave the foreign policy issue with experts who are in that field. So on a foreign trade context, the issue really is that globally trade is shrinking. And in fact, India is somewhat lucky that trade is shrinking a little less for India than in other countries. The big issue for India is that if there is a US-China trade spat going on, and if companies are trying to relocate, would they be relocating to India or would they be relocating to other countries? How could we design our policies such that more of such FDI comes into India rather than going into Vietnam? In that context, I think keeping our borders open, getting our infra push, getting our manufacturing push, getting our tax policies credible and stable, I think these are the things which will really bring the investment that is trying to move out of China back into India, and we will be benefiting out of it. The other thing that we need to do is, in all the FTAs that we have signed over the years, and we have really a gamut of them out there, how can we start getting some benefits out of those FTAs? We have mostly been on the receiving side as yet from these FTAs. So getting these bilateral negotiations going in a world where the multilateral negotiations are not working is something that I will also be advocating for. So trying to get the maximum out of opportunities out of these trade tensions is something that as a trade policy we should be focusing on, keeping the foreign policy part different from the trade policies.
Now, Shamika Ravi, ordinarily, if the United States and China are going to a trade war, India should be one of the beneficiaries because it's perceived as being close to the United States. That would have happened if Hillary Clinton were president or Barack Obama or anybody else. But given the unique nature of Donald Trump, we've got a situation where not just is he training his guns on China and upping the ante constantly, he's also got one missile system directed at India and firing away. How concerned is the Modi government from the, with the belligerence with states? How do you think we should be dealing with it? Shamika Ravi.
Well, there are announcements and then there are actions, and in a lot of these international relations matters, there are multiple factors at play, and it isn't quite as obvious as it seems through only announcements. So it really will be about negotiating the trade agreements on specific matters with the US. But the larger question here is, and this is where we shouldn't be missing the woods for the trees in terms of, even if US and China were not in the middle of a trade war, the fact that China is aging and the cost of production in China is rapidly, it has grown over the last 10 years. We have seen a steady flow of businesses into other countries, emerging market like Vietnam, as Samiran mentioned, Kenya, Thailand, and this is where we really have to see that if this new trade war if it is to become a window of opportunity for us, then how exactly is the Indian market going to improve its competitiveness vis-a-vis some of these emerging markets to whom we have begun to lose business. So it really, you have to keep the larger view of international trade and India's competitive advantage. This particular episode, while it is important, given the growing India-US relations, but I don't think it really is as much of a roadblock as it's being made out to be.
Now the Indian government thinks it isn't much of a roadblock. And at the highest levels, they were convinced that once a new government is in place, given the fact that we are willing to make allowances to the United States, that Donald Trump would fall in line. But we saw very recently the generalized system of preferences, or GSP, was withdrawn. So this is not something, Meghnad Desai, that the US is only talking about. They're actually acting on it as well. Now, the best case scenario from an India perspective is that Donald Trump is a tough negotiator. You bargain hard with him, you give him what he wants, you allow Harley Davidsons, for example, to come into India virtually free. It's like giving him a lollipop, he'll be happy. Is that what it is, or do you believe we have a real problem on our hands? How do you think we should be dealing with it? Meghnad Desai.
You see, my view is that, first of all, Trump's negotiating tactics are such that he always threatens the worst, and then he tracks back and accommodates. So I think as far as his threat to India is concerned, we have to play a slightly longer game, not take it 100% seriously. He has done that with the European Union, he's done this with Mexico, he's done this with China and so on. So we have to calibrate our response so that we keep the American friendship and not immediately say, oh, America and China are fighting, so we are going to, sort of get some advantage. Secondly, I think as some of your participants said, India has to have a much more sophisticated economic machinery ready to take advantage of these opportunities. After all, we will have to, at some stage, reform our labor laws and our land laws for manufacturers to be able to locate in India. If people are not going to be in China and going to be in India, is India ready for that? Because we have a horrendously anti-labor policy in manufacturing. We have had it for 70 years and nobody has done anything about it. Now, I think we have to prepare the ground for this, because Make in India did not succeed very much. And so we have to find out why it did not succeed very much. Is it a land problem? Is it a labor problem? So if you're going to take advantage of this opportunity, as and when it comes, we will have to be prepared.
The problem we have now, Rajiv, is that some of the demands that he's making of India are virtually impossible to accept. If we renege on the S-400 deal with Russia, Russia will be upset. They could start selling those weapon systems to Pakistan. That creates a whole mess of its own. Suddenly, Pakistan has weapon systems we don't want them to have.
He's a tough negotiator, and we ought to be equally tough. Exactly like what we have done with the Iran discussions, we have to drag it as much as possible. But there is a silver lining in this whole India and the world trade. If you look at the number of goods exported in the past 5 years, we've actually practically been stagnant. But if you look at services, Rahul, we have grown by 33%. We've grown by $50 billion. So we have an opportunity, at least in the interim, till all these things get sorted, in the services sector to continue pushing in that area and ensure that our services growth continues at this pace. We'll still be able to get enough forex as far as exports are concerned, and continue with a tougher stand as far as negotiations are concerned. There will be give and take. Economic nationalism is a reality of today. It is raising barriers, every country is raising barriers around it. It is increasing the costs for their citizens, but it is a reality of today. Every country is doing it. So many countries are beginning to do it. So we have to then go into bilateral discussions with each of the countries that we can deal with. And also ensure, like one of the panelists was referring to, is that ensure that our FTAs are not to our disadvantage. But the best way, I would say, to deal with an India export crisis is to ensure that our domestic economy we are in control of, because 2/3 of our economy is still domestic economy, and we can get out of this problem by just dealing with the domestic economy, ensuring that domestic economy starts to grow.
Okay, Naina Lal Kidwai, how would you look at the foreign trade and foreign policy imperatives at play in the rising trade tensions between India and the United States? How should this government be dealing with them?
So my perspective would be that it is an opportunity for India to attract capital, and in attracting capital, we should not look at the FDI number alone, because we pat ourselves on the back that FDI went up, which is true, but to rather break up FDI, foreign direct investment, in two categories. One, which is often FDI coming in through private equity and otherwise into existing assets, but the other to look at FDI into greenfield and new asset creation, and that is really the focus that we need as we attract investment into India in a way that actually benefits from the trade war that is continuing to build between the US and China. And let's not forget that the huge investments that are happening by China and Chinese companies into India is a very new phenomenon too. It's something to be encouraged. It's one that helps us. And to the extent that the Piyush Goyal statements on looking at imports and where 60% of imports can indeed be managed in a way that we grow India investment in those spaces, this is the right time to look at it, because as countries get more and more protectionist, let us also look at how we can protect our MSMEs who are crying about dumping in their spaces. Let us look at how our imports can see proper substitution, and for that we need to ensure that the cost of capital, which is the intermediation costs, which are very high in banking, come down. We need to look at capital and land banks because that is again a space which is a challenge. We need to look at the labor laws, which Meghnad Desai rightly alluded to. So really ease of doing business, but clearly the cost of capital to be managed. Let's not forget that the data that we're seeing today, which is worrying for manufacturing as a whole, is input costs have crept up and output prices have fallen. So what we need to ensure is the margins that exist are indeed competitive and attractive for investment to come in. So I would say let's focus on attracting investment into India in the sectors that matter to us in terms of employment generation and consumption.
The last question I'm putting on this economy roundtable: will the Prime Minister in his second term follow through his claim that the government has no business of being in business? Shamika Ravi, do you believe that the government this time will push ahead with disinvestment of companies like Air India? Because if you look at the Prime Minister's track record, even in Gujarat, this Chief Minister, his primary push was to try and run public sector enterprises more efficiently, to try and take them out of red, run them properly. That was his thrust. Will he actually follow through on that promise of government having no business of being in business? Shamika Ravi.
I think yes, he will, because a large part of this improvement in the ease of doing business really does have to do with removing obstacles which are related to government. As far as privatization is concerned, I think raising efficiency by improving governance, while that was the legacy of the last term, I do think there are natural limits to how much efficiency can be increased if the fundamental governance structure is one that is run on government incentives. So by that virtue, I mean by that logic, many of us believe that there is no alternative to privatizing certain government PSUs. Because they have been bleeding for a while. We have a much better estimate of what the true opportunity cost of maintaining some of these enterprises are.
Okay, Mohan Guruswamy, disinvestment had a political cost for the Vajpayee government. After that, the BJP was starred. You always got the likes of the Swadeshi Jagran Manch and the others breathing down on the government. Do you believe they'll push through on disinvestment, or do you believe it's too tricky, too dangerous, too volatile, too many possible charges of corruption being leveled, and therefore he's unlikely to touch it?
No, I think he should push through disinvestment, but disinvestment doesn't mean selling government shares to the public. Disinvestment means taking government management out of companies, out of businesses, which includes banks. I think there's a case now to free banks, to free all our public sector enterprises from the control of deputy secretaries. And that is the main problem, because today you just cannot get any profits without administered pricing. And entire public sector is bleeding. Now Air India is again asked for 30,000 crores till 2022. Already 43,000 crores down the tubes. Are you going to keep giving money? And the Prime Minister's record on this is not very convincing. You know, what did he do in Gujarat? he sold the Gujarat State Petroleum Corporation, which had a whole of 23,000 crores, to ONGC. ONGC picked up the loss. So I think, you've got to bite the bullet now. You just can't keep spending money.
Okay,
on
Lord
all these
Meghnad
white
Desai,
elephants.
which
And
are
you
the
say, okay,
public
these guys are
sector
making
companies
losses, let them go.
that you think the government should seek to disinvest first? He hasn't bitten the bullet so far. Are you convinced that this time he will?
I doubt it, but I would first of all package up all the public sector banks, recapitalize them and then sell them. I would definitely sell, I'll give away Air India for nothing. If anybody takes Air India away, it'll save the taxpayer so much money, but every day it keeps in a business, the taxpayers are bleeding. But also, I don't think disinvestment should mean that LIC buys these things. That is not serious disinvestment. But my view is that the Prime Minister is not a radical privatizer. He wants this present system to work as efficiently as possible, and he'll only be forced to privatize if things go beyond control. And Air India is one of them, and I think the public sector banks are another. But by and large, Narendra Modi is not Margaret Thatcher. We should not mistake him for that. He's like all political parties in India, a moderate conservative. He wants the system to work better, but he doesn't want any radical change which will cause any misery to any employees. I mean, he's very conscious of that. And so we have to sort of have patience that someday, slowly, we will get improvement in public sector, but don't hold your breath for it.
Okay, Samiran Chakravarti, the private sector would like very much for Prime Minister Modi to use this big mandate to be a radical reformer, but nothing that we've seen of his time in public life suggests that that's in his DNA. Air India is an obvious and a sitting target. Do you believe that's where this disinvestment thrust will end? Do you think it will go much deeper?
Well, I think Air India is a more difficult one because it's a very marquee, large investment, and you need to divestment, and you need to find buyers for it. I think one question we often miss is that while government selling its stake is one side of the story, the other side of the story is who is going to buy it. In an economy which, as we were discussing, challenged by private investment, I don't see too many buyers coming up, and that's often the constraint because of which the government is forced to kind of make one PSU company buy another PSU company just to meet its fiscal deficit target. I think that's the challenge that we have to figure out, that all this strategic divestment that we are talking of more than 40 public sector companies, where are the buyers going to come from? And if we can solve this puzzle, then maybe we will be able to do more such divestments. Efficiency is definitely a very strong argument for privatization, but at this moment, the fiscal deficit angle is equally important. We have close to 1 lakh crore to 1.5 lakh crore of requirement just coming from the divestment side. And if we can't privatize, then at least we should look at ways to better monetize land and other kinds of assets that the government already has, because otherwise the fiscal will be clearly under stress.
Okay, we've had various very interesting suggestions. LIC trying to buy in one of the government companies is clearly no disinvestment. So there, what you need to see, if at all there will be any disinvestment, is a complete change of management. The government has to get out, let private sector do the job. It's easy for Lord Desai to suggest give Air India away for free. If somebody were to do that, there will be a public scandal of a sort no Neta would be able to deal with. So
government is worried about one more scandal, Rahul. When we met the DIPAM secretary, he was saying that disinvestment in Russia and China has actually created oligarchs and princelings, and the government doesn't want to just wants to ensure that it doesn't happen in India. So the government is clearly clearly worried about any such things happening, such kind of scandals emerging out of a disinvestment project. And so it seems that Narendra Modi has no record.
It's very easy to suggest scandal.
Yeah.
It's like a defense deal, because all of it is not completely transparent and out in the open, even though even at that time Arun Shourie tried to ensure that it was, and Yashwant Sinha did as well. it's very easy to allege ghapla. It's like Rafael. If you want to level that charge, you can level it very easily.
It's very simple, especially if two or three companies goes to the same company, to same promoter, and then you can always level those charges. So government is very conscious of that. It doesn't want to get into any such situation, and so their interpretation of this is that whenever a public sector company buys another public sector company, that is also disinvestment. That's one of their interpretations.
That's jugaad. That's not disinvestment in the least. But this has been a very interesting conversation, some very interesting ideas there. We of course will keep a very close eye on what Messrs. Sitaraman, Piyush Goyal, Amit Shah and Narendra Modi do at the end of it all. Lord Meghnath Desai, Mohan Guruswamy, Samiran Chakrabarti, Naina Lal Kidwai, Shamika Ravi and Rajiv Dubey for joining us on the India Today Economists Roundtable. Thank you very much. I hope you enjoyed this conversation. Goodbye.
Thanks for watching the video. For more such news and updates, please like, share and subscribe to India Today. Also check out our other great videos from our channel. We know you will love to.